And the creation of shared value is incredibly important, but that comes with a duty of care. So the mindset must be a business mindset, having the agility and tenacity in business, creating a business acumen. And in my humble opinion, it's a business that has a property asset within it and a transformation undergoing, not a property transformation, a property conversion or a development with a business wrapper around it. Okay, there's many things to discuss, and we'll go through many of them today. Okay, so it's hard work, and I think just raise your hand if you find entrepreneurship as a whole hard work. Yeah, a lot of you, and it is hard work. But if you follow the right systems, have the right level of experience, or utilise the levels of experience, it's very much achievable. There has to be an abundance mindset, but there has to be that clarity and reality. And one of the areas that I see, and I've been a business investor and a leader of businesses around the world for 25 years, and I've never seen a business really go to the wall and fail because of lack of profit. Well, almost certainly it's cash flow, and we're going to touch on cash flow quite a number of times this evening. So it's these solid empirical business grounded evidence which will help you succeed, looking at the risk and return profile and understanding that power of leverage of other people's time and experience will ensure that your developments drive forward, not on a self-driven basis necessarily, not on a self-made basis, but a self-driven basis. You'll be highly accountable. You can outsource responsibility, but you can never outsource accountability. Okay, and we'll look at how you can achieve that. And then creating contribution back into society. So those fundamentals of business, many enshrined within people, planet, profit, high-level sustainability strategies that we've been involved in renewable power, energy, and global business transformation for many years. So that really gives you the seating and the core of what this will be about this evening, to make your commercial conversions highly effective and optimized. So we have a framework. I call it the 12 fundamentals. And we haven't got time to go through every one of these tonight, but it starts with you and it starts with your strategy. But I'm not going to go too much into your own personal mindset. There are many other areas that many of you are focusing on. So we're going to cover the real expertise that is required, the gritty, nitty detail of commercial conversions. Okay, just change my headset there. You can hear me better. So those 12 fundamentals based around you and your strategy, the finding of your commercial conversions, the due diligence, and who relies on that due diligence and when is incredibly important, a core fundamental. The planning, we're talking about formal planning here. The valuation process stands alone on its own. It is a fundamental gate within your development system. The funding and all parts of that funding, whether that be a commercial development finance or whether that be private investment and all its forms. The overall economics of your business and the development that sits within it. The completion process, and I'm talking here the completion process of acquiring the property. That completion process is incredibly torturous. That probably is the area where you can have significant capital at risk. And once you've got that completion process, you've arrived at the start line of your new development and moving into the refurbishment and construction phase. So we spend a lot of time on completion, and we'll touch on a number of areas which will assist you to really put that on track. Business. Operating this as a business, you're going to be potentially directors, shareholders, understanding exactly the tax regime, the requirements, your fiduciary responsibilities as directors. The construction phase potentially has risk in there, but also has return. Okay, working with your partners, who you'll be able to create ongoing relationships, and the contracting team, which includes a design team through that construction phase as well, or your monitoring, that'll link in with the banks, incredibly important phase. So how do we navigate those? And then your exit options. So we can't go through every one of these today, but that is our 12-phase system, our 12 fundamentals. And we have systems and processes that we've developed over 25 years, which will help us in every single one of our developments, past, present, and way into the future. And this system evolves. Okay, it's continuous evolution because the externalities are changing. So we view this as an economic equation. Every element you can put in a fundamental set of wealth and economic criteria. It has risk. Each element has risk. Risk isn't a bad thing. You need to understand how you identify risk, how you manage risk, how you transfer risk, and how you then potentially mitigate risk as well, and what assurance platform you have. And that will create you a set of returns. You have gross returns and net returns. So would it be not a good idea to create risk-adjusted returns? And that's a business language, a business acumen that I mentioned before, which is pivotal in ensuring your development has the best opportunity to manage those risks and your returns see the light of day and in fact are magnified as you exit or as you refinance, whatever your strategy is, out the back end of that development. So who are we? Many of you know EquaGroup, some of you may not. I'm going to assume nothing. So there are 4 partners within EquaGroup. Nigel Green, I've known Nigel since 1997. We've worked together on large global infrastructure projects. Nigel has been project director and company director of many organisations and has run projects up to 100 million sterling in value across EMEA and the UK. Highly complex in some of the most secure environments. Be they large bank trading centres, data centres, atomic weapons establishment, Bank of England, highly secure environments where risk and quality and attention to detail, communication and effective planning are the hallmark of Nigel's due diligence. And it really is bank grade due diligence. It has to be. Phil Burr, known Phil for almost 20 years. Been a board member with Phil and with Nigel and with Mike since 2002. Phil's been a commercial director for over 30 years, has been financially responsible for every element of quantity surveying, commercial management, pre-construction, contract phase, closeout. He's seen an awful lot in that time. So Phil is our assurance program for delivering each one of our developments and has been since 2002. Mike, known Mike since 2000, again been board members together. Mike's background is as director of PLC, running any number of regional operating companies, engineering businesses, business investor himself, property investor, has run many different businesses and also brought on new talent into those businesses as well. So being responsible for hundreds of millions per year of turnover, and also been, as a business investor, created substantial returns for the PLC and also for investing directors. Myself, my background, I had a degree in construction in the late 80s. I've worked all across the UK, across EMEA. I've worked across 4 continents, 33 countries. Project value range that I've been responsible for and company. Individual project size up to 500 million. Company turnover frequently in the hundreds of millions per annum. I've worked all across Asia Pacific, the US and EMEA. global infrastructure projects. So all of us are very familiar with understanding business process systems. We've been directors of multiple companies, and it's that experience that you can't read a book on. We've learned the hard way. We've learned from our peers. We've learned from quality mentors who have taken us through that process, helped us when we've stumbled, lifted us when we've fallen. But it's that attention to detail and acumen that even in the tough times when we've had challenges, we've always been able to recover that situation. Okay, there will always be bumps along the road, but our mindset has always been, you know, those challenges will be on the way, not in the way. And if you have that business mindset and can understand that no matter what the challenges are, you can overcome them. And I'll come on to the power of anticipation shortly. But there's a lot of knowledge. There's 120 years of experience in construction, running businesses, property investment, property development, and international business management. And it's you to tap into. Okay, we've got a meeting tomorrow at Mercedes-Benz World in Surrey, just ahead of the Brooklands event. And again, there'll be lots of networking and deal clinics and things. So if you're around, come along. So this is some of our programs in the past. Large data centers, cut and carve of dealer floors for Morgan Stanley, JP Morgan, Goldman Sachs, any of the large banks around the world. Highly accountable, and the consequential effect cannot be insured on some of these projects. We're talking hundreds of millions, if not billions, of consequential loss. So the paranoia of risk management is everything. However, using that experience and using simple systems and processes is where you get to that level of acumen to be able to achieve this. And we have many of our mentors and many of our mentees who are achieving great things at the moment and have only been approaching commercial conversions in the last 1, 2, 3 years. So it really is possible. These are some of the projects that we've got underway at the moment. Most of these are live in construction. They vary anywhere from 6 apartments up to 40 apartments. We've secured 2 projects in the last 7 days. One is 28 apartments and the other is 37 apartments in the southeast of England. So that alone is a combined GDV of between 11 and 12 million. So we've got a great pipeline there. Pipeline's around about 65 million. Secured order book is there. The investors are there. Projects are underway. We've got a whole tranche of apartments coming into the sales phase just in early autumn. So really excited about this next tranche of investment projects that we have coming through. And here's one of those. It's one up in Hull called Wright Street. It's a grade 2 listed office, and we actually secured this in January. We secured it in our SAS, the final cutting of the umbilical cord from our corporate life. All 4 of us retired from corporate life 2 years ago. Yeah, that final cutting of that umbilical cord was to consider taking our pensions, and we've created a trust, and we have trustees, and that now has swelled with our pension, and we're all generally in our late 40s, around about 50. So we couldn't take the value in a tax efficient manner, so we have that in our trust, and this is one commercial property that we've secured. That now has successfully gained planning, full planning. It was grade 2 listed for 18 apartments, 1 and 2 bedroom apartments on a conditional exchange, and that is currently about to be transferred and sold into an SPV, where the the contractor is waiting to move in second week in September. So lots to look forward to, lots of site visits will be happening, and really looking forward to showing and sharing with you how that development is going to proceed. And looking at not just working hard, but working smart, the potential for capital allowances on some of these projects is nothing short of staggering. So in that particular one, there's a potential of 150,000 of capital allowances alone. So this is the type of thing we discuss on a regular basis, that area of shared value. high level numbers. GDV is about 2 million, purchase price £500,000, refurb is around about 800,000, and we have whole cost, planning costs, funding costs, which will give a great profit, great return for our private investor and for Equa Group of in excess of a third of a million, and we hope to improve on that as well. So these projects can be catalytic to changing your life. Imagine bringing in a private investor and securing 50% of that return, and what impact that could have for you. But you need to be able to be grounded, understand exactly how to run your developments as a business. So why would we do this? What are our motivators and drivers? And I'm a bit of a contrarian, so you're going to hear it as it is. I might not be reading off a manual or a book. This is just us and me, how we approach things. So from a materiality point of view, we're not interested in Ferraris and Lamborghinis. Personally, we're in our late 40s. We've got loads of kids between us. I've got 4. A number of the other guys have got 3 or 4 each as well. So our drivers are not material things in terms of watches, cars. It just doesn't suit our lifestyle, to be honest. Can't fit 4 kids in a Ferrari. But of course, we enjoy to live life. We really do have that passion. And as an engineer, I love watches, love high-end watches, that precision engineering excellence. It's back to that high performance culture and the passion that goes into horology. I absolutely love it. So materiality, ask yourself that question, why are you doing it? Is that important to you? Time. That was probably me, stood on a train platform. And it was, I left that life 2 years ago. But have you ever wondered when you stood on that commuter platform, those of you who are in work, that you navigate and migrate to that crack in the pavement because you know that those doors open at that crack in the train station platform? You become lemming-like. And you can see, that's a great example there. Everybody's lined up because they won't come close to the camera because actually there's no door there. I looked at myself and I looked at others in the queue and I thought, actually, do I really want this? Do I really want this? I have 4 children. I'm running multiple businesses. The more successful I'm getting, the less time I'm spending with the ones that I love, my wonderful wife Sharon and my 4 children. So I took the bold step of leaving corporate life, because my time was my biggest asset. It's my most scarce resource as well. So that's my particular focus on time, and that translates into relationships. I now work from home. Fantastic, 4 kids. I have to be honest, I'm not normally that anal. I don't normally line them up in height order and ask them to stand still. But they're my 4 wonderful children, mean the world to me. And once you get to that position of stability where you have time, to understand and collect your thoughts and actually draw breath and decide, well, what actually do you want to achieve? Where is that legacy? And where's that contribution back to others, back to society? And many of you will know that as part of my networking event, and we're about to release some phenomenally exciting news in the autumn around young entrepreneur. Really inspiring young people as they enter the world of adulthood, that they're prepared and equipped and understand a life of choices. So that's my give back to society at a level where we can help thousands and thousands of not just young people but families, parents. Whether you want to be a young entrepreneur or whether you want to raise a young entrepreneur, it covers the whole spectrum. And ultimately, it's to create a life of choices. Whether I want to go and sit on a beach or go and ski or whatever it is, I can achieve whatever I like. I have to say, I don't necessarily subscribe to the laptop on my knees on a beach approach to entrepreneurship. It's hard work. I did come out of the womb a workaholic. That's something I have to combat on a daily basis, but I have a lovely wife who reminds me of that on a regular basis. But I do what I love, and that's the important thing. That old adage, if you do what you love, you'll never work another day in your life. If you get to that point, then you truly have got that life of choices. So how will you translate that into your property strategy? These are some of the strategies that I know many of you have considered, and these are some that we consider. We've done buy-to-lets, we have a serviced accommodation business, and we have an HMO business as well. We've done flips, and with each one, wherever you are in that pyramid of complexity, the risk will increase, the returns will increase, expertise required and time will vary. And the area we like, and particularly the valuable asset that is commercial finance, is high-end commercial conversions and large developments. That's our background. Personally, I've been responsible for over 3 million square feet and 1.5 billion of global infrastructure. So size just doesn't faze us. It's just a few noughts. The processes, whether you're looking at a £1 or £2 million GDV development and a 10, 20 million GDV development, you'll still have many of the same criteria. But what's it really important to recognise, and I would encourage you to look at this in your strategy, is to look at one of the most empirical KPIs that we have in our business, and that's our key performance indicators, and that's the return on our time invested, or return on time employed, ROTI, ROTE. That return on time employed in those larger projects of commercial conversions and developments, not only can we increase the volume of work that we can undertake, the capacity within our business to create shared value in the community and really drive these transformations and regenerate aging infrastructure and assets, but we can also deploy, employ, engage very accountable professional team, and we'll come on to the professional team in a little while. And that enables us to leverage our time, accountability, and help us control, understand, mitigate, and transfer some of the risks in our development. So I'd encourage you, if you haven't got a KPI of your return on time invested, I would put that very high on your list within your business strategy. Let's check if we've got any questions. Very hard work, yes, yes indeed. Yeah, a few of you have commented on that. Good, right, okay. Let's move on. So, just focusing on time. When I came out of college or university with my degree in construction in 1992, I went to I've only ever worked for 2 employers, had 50 or 60 roles, but they moved me to the States. I went to the States for pretty much the whole of 1992 and 1993. And when I was in the US, I worked on many projects. Large was a massive civil engineering project at Lock and Dam 16 on the Mississippi, while the ice was frozen the river, so we spent the winter of fun on a major civil engineering project. That was my first ever joint venture with major contractor Peter Kiewit and Sons and the US Army Corps of Engineers. So a pretty heavy order, $30 million joint venture project, and it took 3 months. That was the time period we had when the Mississippi froze over. But while I was there, I mentioned Peter Kiewit and Sons. They're a very large contractor in the US. I was based in Omaha, Nebraska, at a place called Kiewit Plaza, and we had a pretty busy day. We'd got a tender out by midday, so later on in the evening we walked across to a steakhouse just across the road, have a steak and a glass of red wine, and just in the corner there was a gentleman who the friend I was with, an American friend, was quite friendly with, and he waved us over and asked us if he'd like to join us for dinner. So we did. We joined this gentleman who was a real font of knowledge, and we went to we went probably for about 2 hours over that glass of wine, and yeah, that person left. I I'd like to say left a real imprint on my life. That person was Warren Buffett. Now, I was 23 years old back in 1992, and I'm humble enough to say that I didn't know who Warren Buffett was, and I'm pretty sure Warren Buffett wasn't too sure who I was either. But it was an engaging conversation, and I remember afterwards being explained to who Warren Buffett actually was. Now, Warren Buffett plays the long game. You know, he's very precious about his time. And I love his quote, "Someone is sitting in the shade today because someone planted a tree a long time ago." And that's that law of compounding effect and how you can approach that long-term play. So understand your long-term vision. Commercial conversions isn't a get rich quick strategy, although it can be, but plant those firm foundations. Now, this is Warren Buffett's net worth. Started way back when he was 14 with a few thousand dollars. When I met him in 1992, he was 58, looked a sprightly 58 years old, and it's quite small there, but his net worth was estimated at 2.3 billion. Now, that net worth has increased by 56 billion since I met Warren Buffett. I'd love to say it was since Warren Buffett met me, but I don't think the impact was, I don't think I had that impact on him. So Warren Buffett's net worth since 1992 has increased by 56 billion US dollars. And I have to be honest with you, mine hasn't. So something for me to focus on. Done okay, but yeah, that's the long game, those seeds. I suspect the real seeds of that growth were sowed many years before 1992, as we well know. So there's going to be challenges over that time. And I have a very inconvenient truth in one of my passions, which is really getting to the bottom of my reserve tank. What am I capable of? I've lived a fulfilled life of 25 years in business, and I've seen how competition can eat people away, looking at one layer of profit and bayoneting the wounded and robbing the bodies to divide that profit share up. But if you look at a larger game, a larger play, you'll understand that actually hard work now can create a lot of value and get you to where your goal needs to be, where you want that to be. So as an ultra runner, I understand that you have to go through some pain. You know, many of you have already asked whether you feel the pain, whether you find it hard, and you know, pretty much every hand went up there. There was so many comments there saying, yes, Mark, yes, absolutely, thumbs up. Okay, you will have to go through some inconvenient truths, some pain, and endure that to enable your goals. And life isn't easy, but if we anticipate life isn't easy, then all will become a lot clearer. Okay. So I ask you, how badly do you want your goals? And I'm sure you've all eaten, you've all got a nice cup of tea ahead, and something I shared with a few close friends last month. So as an ultra runner, I've been through the pain barrier. I know what pain can feel like, and I have to say, I'm sure it is not even on a level that the many ladies have experienced through childbirth. So again, my lovely wife Sharon, she puts me in my place there. But going through that pain voluntarily to get to a goal that you know is important to you. There's two types of pain. That mildly inconvenient pain, which might smart a bit along the way, and then the red alert pain, which come up on your business dashboard of life. That could be hypothermia, you know, it could be heat stroke, dehydration, those red alert ones, which you really need to be mindful of. The others, you can put them into memory plus, back of your mind, and condition yourself to overcome those. So here's some of the pain. Recently, I recently ran a 55-mile ultramarathon, and after about mile 13, I got that rather nice blister on the bottom of my feet. And I haven't got a foot fetish, but some of these blisters, we've got a rather nice blood blister there. These are the sort of things you have to contend with. I was running across the Sahara Desert in the Marathon des Sables in this event, and your feet literally falling apart. But you know what? Actually, the desire to get to that goal is greater. And it doesn't matter when your body and your mind is just telling you it wants to go to sleep and curl up under a hedge, although there weren't any hedges in the Sahara, but you know what I mean. Then you can really use that power of your mind and your body, understand where your reserve tank is, start that healing process, put it in context. And I've seen pain, real pain, that others have sadly been through and not necessarily survived. And it's not a pleasant thing, not something I'd wish on anybody. So putting your pain, your mildly inconvenient challenges into context is incredibly important. So these are some of the lessons I want to share with you, and they are absolutely relevant to your commercial conversion. So preparation, make your preparation habitual in everything you do. Our due diligence, bank grade due diligence, is highly systematic. It is systemic in everything we do. Same as our company setups, our company wind downs. Determination, focus and desire, you have to have it. It has to be in your DNA, right at your heart, okay, in your soul. Once you have that clarity and focus, nothing will get in your way. It needs to be fueled along the way, the right type of hydration along the way, nutrition, mental and physical along the way. And hopefully this webinar in some way is helping inspire you, and with our mentees and various areas that we get inspiration from. Okay, so support along the way. You will need a support team, absolutely. But my suggestion here is you need to be comfortable alone as well. Okay, it can be a lonely place on those trails. I ran 107 miles from London to Birmingham. Took me 24.5 hours. You need to be comfortable with pain. You need to be comfortable with your own company and focus. And you cannot outsource decision making. Okay, you can get all the best advice you can in your business life. You can't advise the advice network. They won't make you recommendations on what you need to do. You'll have to assimilate that information, make decisions and go for it, and that takes courage, and that sometimes can be a very lonely business. You need the right equipment, the torch to illuminate that roadmap in front of you, and that map and compass to then navigate you across that route. Visualize those milestones and they will graduate. When I did that 107-mile run, the first 30 miles was just getting into a rhythm. Mile 30 to 70 was balancing my nutrition, and gradually by mile 75 I was just focusing on getting to the next hedge, the next gatepost, the next sheep in the field, whatever that may be. Okay, so you need to adjust your milestones and gradually draw into focus the more shorter term goals, and never ever stop advancing. Progress every time. Fail forward, you might stumble, but you'll never stumble backwards, always stumble forwards. So I don't believe there's any pain at the finishing line. When you sit down, and most of my finishing lines have been 2 flags in the middle of a field and probably 2 o'clock in the morning, and that quiet contemplation of you've achieved your goal, it is only relevant to you, not to anybody else, because it's your goal. It's so priceless, so precious, and all it needs is a cup of tea and some quiet contemplation. That is real passion in achieving what you want and what you desire. So I encourage you to have that clarity and focus. So my life now, just to finish off this particular section, retired from corporate life for 2 years. I now work from home. My business partners work from home. We engage together as EquaGroup. We're making great strides, and we have those choices, and we select our partners carefully because I know they also select us carefully. Okay, so we're looking for win-win relationships, and we want to enjoy who we work with. And I don't see that in many manuals. Actually, business should be enjoyable. It can be enjoyable. Okay, whether you want an office, great, but we wanted to create a a liberation where we all have our own roles in our business and we come together extremely regularly. So it gives you that freedom. We create shared value. But creating shared value, please never forget that comes with a duty of care and accountability to your stakeholders. Benjamin Disraeli said, what we anticipate seldom occurs. What we least expect generally happens. So the power of anticipation is your greatest partner. Having the knowledge, the acumen and the courage to reach out, and humility to reach out for the support you need. I liken it to attempting to walk across the room in darkness. Okay, it's pretty painful when you stub your toe or bang your shin into a coffee table. Totally unnecessary. Chances are there's a coffee table in the middle of a room somewhere. So, there aren't many challenges or issues that you will face in your commercial developments that have never ever been experienced before. In fact, I'm sure there aren't any. Somebody has experienced them somewhere. So it's up to you to have the courage, humility and intelligence to reach out and surround yourself with that advice, network and culture so that you can access and anticipate challenges, but also opportunities. There are phenomenal opportunities to improve here. So that power of anticipation. So our values as we go into every development is creating shared value. In EquaLife, we're focusing on our partners, on you, the strategy and the systems, and that is our ecosystem. And our ecosystem creates shared value to all of our stakeholders. This is at the heart of every single initiative, every single development we have done for the last 25 years. We look at creating value for all of these parties and more. Whether it be the vendor, the contractor, we want the contractor to make profit. Profit's not a bad word. We want them to put risk contingency in there. We've got to know they're going to be focused and get to the end project. And actually, whether it be our shareholders, contractors, design team, we don't want to do this once. We want to do this a number of times. And we took that view 25 years ago, and we're still working with some designers now, 25 years later. We still have those relationships because it's endured, because we're all looking after each other, we're all playing the long game, and that's incredibly powerful. Don't try and outsmart each other. Try and utilize everybody's intelligence and go further together rather than going fast very quickly and petering out. So pipelining, the two core areas of development which I'm frequently asked by my mentees, how do you create the growth? Well, we need two things primarily. We need funding and we need deals, finding those developments. The funding, whether that be equity and private investor capital, whether it be vendor finance, obviously commercial development finance is a phenomenal catalyst to our business, and that's why we like working with our background with the large funders, and you can too. The credibility you can gain over what is a very short period of time. In fact, my first ever private investment I got development finance, went direct, had no other partners, so it is possible to achieve. So get some good advice. And then deals, whether they be commercial conversions, HMOs, land development, but we're going to focus on commercial conversions and land developments here this evening. So here's 16 methods of finding your development. I hear a lot of people looking at permitted development, and many people congregating, arriving on the same site, viewing and bumping into a dozen of their friends there. Just be careful when you do your strategy. You're not engaged in a race to the bottom, trying to outbid each other. We see that frequently, and it's not often that we put ourselves into a competing relationship there. So our focus is to find off-market deals, nurture relationships, not go out there to find a site, but actually to lay the relationships out so that when a site does come along, then we become one of their the first port of call for whoever has that. So here's some. Number one, every time, commercial agents. I'm going to go into a lot more detail on commercial agents shortly. If you haven't got great relationships with commercial agents in your area, you're missing a very, very big trick. They're highly professional, highly articulate, and they are some of our best business relationships we have. I'm going to skip through these quite quickly, but private contacts, be amazed whether everybody you speak to needs to know what you do, how you do it. They'll understand your authenticity, but private contacts will know people who are moving on, will know businesses that are moving, somebody selling. So just feeling your network out there. Vendors. We have a number of developments that have come from our existing vendors. So we've done one deal, and what has one vendor quite often got? More commercial property. And we're now accelerating at scale on a number of very large relationships there. Auction works, absolutely, but you're going to be in a competitive market. But you know, understanding where you are in the property or where the property cycle is, you can access some very good deals. Estate agents sometimes get misplaced commercial deals there. They understand some of their more residential landlords have also you've got commercial deals, so don't forget your estate agents. Some of the formality of the likes of Estates Gazette, Rightmove and Zoopla, we keep an eye on it, but at the moment it goes on there, it's out to the masses, so we tend not to get too many opportunities through those areas, although you know, we do keep it up there. Individual websites, specialist websites are a good area. We work with the likes of Fleurettes and Daltons. Daltons is an interesting one. Daltons tend not to sell property. What they do is sell businesses, and quite often what businesses do, businesses have assets within them. So potentially, if you don't want to buy the business, you potentially could break the asset out and acquire the asset. So that can be a happy hunting ground for you. Just know your local area, drive it. In fact, one property, Oak House in Colchester, business partner Nigel Green, who's on this webinar. Nigel found this property because he went to have his hair cut, and he was just watching the area, and he saw a guy on some step ladders putting up the notice board, and this was going back last October, and went for his haircut, made a quick call to the agent, got a viewing, had his haircut, got the viewing literally an hour later, and the property, which was going on the market the next day, needless to say, never went onto the market. We put an offer in and secured that property. So that's a nice 2.6 million GDV project, which will pay for Nigel's haircut. Land registry. If you find pieces of land, you know, great area of research. Local authorities, and in fact any public body, and I would also include charities in that. I could have added that, which have property banks. They have consolidations. They're looking at their back office expenditure, and property is clearly quite a big expenditure. We are also seeing local authorities who have got cash surpluses who are looking to invest in property as well, whether that be shopping centres. So think laterally and walk a mile in other parties' shoes, and you'll extract a lot of potential value there. Sourcing agents and airspace. We tend not to work too much with sourcing agents, although they can come up with some deals. But airspace is interesting. Looking at where you've got an opportunity, looking at the ridge line, and looking at the lower buildings that potentially have headroom. If you've got the tenacity to negotiate contracts and not take quite so much planning risk. And when we're looking at these deals, we're looking at forcing appreciation into the property. Some might say adding value. I prefer the word forcing appreciation. We are looking at an appreciating asset. Nothing depreciates in front of us. We're only interested in the appreciation of our asset class. And those areas can include securing at the right price, certainly at the right terms to protect our seed capital, planning, PDR. We do a lot of work where we secure projects that have PD, but then we go back in and intensify permitted development, which can be a highly effective strategy for you. We have one which had 16 two-bed apartment, and we turned that into into 20 one-bed apartments. So you just get an idea for how you can actually increase your bid and secure that with an offer, which means you're not taking the risk over time as well. With commercial property, looking at NIA and GIA, not all vendors are aware of the potential of their buildings. Don't assume that. In fact, many are not. And so generally the valuation will be on the net internal area, but we as a developer can utilise the GIA, the gross internal area, lobbies, corridors, communal areas. So there's a great transformation we can make there. And then the build, any new home premium in creating the final product, and then selling the freehold, parking, garden, storage areas. And what we find is much of that forced appreciation can happen before we've made the acquisition. And I encourage you to think that when you table your offer and how you structure your offer, that's when you will make your money. It's the structuring of contracts, structuring of engagements, structuring of your business. Structure, structure, structure. That is where you will make and secure your returns, not by sweating it at the back end on your builder's final account. And all the time, as we're forcing in appreciation, we're de-risking the project. We're building in additional headroom, non-realised headroom, realised headroom in the eyes of the funder and indeed our economic model. So we're looking at that decrease in risk. And if we can focus on that decrease in risk, we have the potential to strongly increase our forward profit projection. Now, we won't necessarily realise that profit early on. Our mantra, and I encourage you to do exactly the same thing, is under promise, over deliver. Okay, be very cautious on your numbers. Make sure you've got enough headroom in there. The bank will check that and want that anyway. So, really be quite cautious, but that approach will help you increase your profits. So your secure entry, I'm not talking about your security company. I'm talking about how you can manage your offer. Okay, your commercial agent is your best friend here. You may be direct to vendor in some of these relationships, but the principles still hold. Your commercial agent is highly, highly professional, very different to many other agents that you may have met in other property strategies. What I have seen, and my eyes roll every time I see it on Facebook, is where people will raise a comment of, I've put an offer in, surely the agent has an absolute responsibility to put my offer to the vendor. What do we think about that? Does that feel like a sense of entitlement? My offer is entitled to be presented. If you enter that approach, well, I'm afraid the agent, even if the agent did decide to put your offer through to the vendor, do you think the recommendation that comes with it, the body language that comes with it, your agent will present the best bid. Your agent has an income model that is based on a fixed overhead cost, and he is paid commission on a success based only. Your commercial agent will back the party he or she feels is in the best interests of the vendor, will get to a completion in the quickest order of time. Okay, their worst nightmare is being jilted at the altar and having to start the whole process all over again. So please don't become one of those people who just looks upon this as a sense of entitlement. Well, my offer should be presented. Okay, do the hard yards. Okay, look at your terms of your offer. We're very transparent with our commercial agents. We show them our development analyzer. Take plenty of time, we have to. I think it's probably the most sophisticated development analyzer in the country, and we take them through. We show them exactly what we're doing, why, and how the terms of our offer have been brought about. In doing that, we're articulating that we understand the risks, we understand the pitfalls. There are just bumps along the way, but no problems in the way. And they have a route to assurance with a very credible, well-funded party that will get to the completion line effectively and in the right style and manner. Proof of funding, tax. Please remember tax when you're putting in bid. You're dealing with a commercial property here. You must ask the right questions, the open questions, and build your bank and rank of questions and a checklist. We build that checklist into our development analyzer to ensure that we're asking those questions. So with tax, in particular with VAT, you may be looking at disapplying VAT or making sure VAT isn't applicable. It's probably going to spoil your day if you put an offer in for £1 million and find actually you need to find 1.2 million to purchase it. It's not a showstopper if you can't use and if you've got your pens out. VAT, HMRC 1614D form is your disapply form for VAT. We've had a number of situations where through accountants' advice and HMRC position where VAT has actually been paid by the prior party, the disapply doesn't work. So you're then into quite complex structuring to overcome that problem and bridging that cash position of VAT. But with the right attitude, right approach, using your commercial agent who has probably seen these things before, you can overcome pretty much any challenge. You know, it's that anticipation again. Let's check if we've got any questions. No, I think we're good. Assignability. Things will happen to you along the route. Okay, I guarantee you. And you need to be prepared. You need to build in your escape hatches. You need to build in with tenacity and honourably the areas that you may have to avert. So, for instance, you may be exchanged on a project, and you may wish circumstances change, and you may not wish to complete on it. Well, if you have let's say you've negotiated a 6 months exchange with a delayed completion, you could potentially put that into auction. But unless you've got an assignability clause, you're at the behest of the vendor, who may well hold you accountable to completing in that legal entity rather than the successful legal entity that bids for the property at auction. So assignability, please understand that and focus. I said this is going to be about detail, the gritty reality that will protect you. Okay, I'm not going to give you the two-step system to make in £1 million overnight. Fist bump, rah, rah, rah. I don't do that. I will do my utmost to protect you with the knowledge up front, not drip feed you motivation along the way. Your motivation will come through your confidence in forecasting and anticipating these challenges. And once that confidence swells and grows, you can capture a huge amount of value, not just for you, but your fellow stakeholders. And along with assignability, decide who or what makes the offer. What legal entity? Okay, is it an LLP? Is it a limited company? Is it a trust? Is it a charity? Is it you as an individual? And many other areas. So I've mentioned our development analyzer. We see a lot of errors. We have an awful lot of people approach us for joint ventures. They want a joint venture. And we joint venture with a lot of people. We really do. And we love it. It's great. Creating shared value, understanding what they bring to the table, what we bring to the table. But the type of development analyzers that we see can be, and I've just knocked up a sample one here, very poor information. And some of the pitfalls here, and I'll explain why these pitfalls are incredibly important for you to understand and to avoid. And my recommendation is you think very carefully as to whether there's any value in an analyzer that looks like that. Firstly, it's too basic. There's a lot of moving parts here, and you need to understand what they are. These type of quick fix analyzers, they only deal with each element in isolation. So if your GDV changes, or your purchase price changes, or your construction costs change, but what happens if your GDV goes down and your build cost goes up and your project duration goes out, therefore your funding cost goes up? You need to understand and have your hands on the levers and understand the consequential cause and effect. Now that sounds complicated, but if you've got the right tools and the right acumen there, you can create what we call the sensitivity analysis, and we can help you do that. So compounding and sensitivity analysis, hugely important. Have any of you ever thought, and I think, let's quick hand raise, who's very familiar with the laws of compounding effect? Can you just raise your hands, please? Oh yeah, pretty much everybody. What's often not looked at is by turning a blind eye to little incremental potential that you don't realize, actually compounding effect can happen in a negative way as well. Okay, the negative compounding effect of all the little bad things that happen can take your project underwater very, very quickly if you're not careful. So with just very simple checklist, albeit a very detailed checklist, this isn't easy, but it can be quite simple if you've got the processes there with that sensitivity analysis. Some of them don't account for all the costs. They're simply wrong. They don't account for all elements there. Okay, you want enough elements in there that are your monitor and checklist. Not everything will apply to every contract. The counter I sometimes hear is, but Mark, we have to move quickly. Our analyzer, if we need to move quick, well, Nigel can do it while he's having his haircut. So, within an hour, 2 hours, we're at that first stage of realizing where we are with the numbers. And most site visits might last that period of time. So, these sort of things can happen in your car, on the site. That's how quick you have to be, particularly when you're heading a project off at the pass, which is just about to come on market. And a lot of our deals never make it on market because we're in there very quickly. Quite often they're not audited. They haven't got calc checks. So they have to be bulletproof, audit proof, make sure the cell references and the calculations are accurate. And here's the thing. The truth emerges after the costs have expended. If you mess it up there, you'll put your offer in, you'll appoint your solicitor, you might get a survey done, and in commercial world that you're talking hundreds, if not thousands, several thousands of pounds initially, and then you find out actually you've dropped a clanger on your evaluation and the deal, let's say the deal doesn't work. You've then shed £1,000-2,000 very early stage of the contract potentially, and that could have been avoided. So doing your due diligence right in template form will allow you to do cracking level of bank grade due diligence very quickly. You'll have that springboard there to seize that opportunity, and you'll be on a lot safer ground than ever you would be with another form. So this would be an example of the type of deal analyzer we have, incredibly detailed. There's expanded columns, which I've not expanded to get in there, and multiple columns. So you can see this is bank grade due diligence at a level, and that is the correct status. It is bank grade due diligence. You're not a bank unless you're putting your own money into this, but a bank will scrutinize this. Not on the day you put your offer in, but it will do. They will do later down the line. So this is about risk management. Every risk is assessable. Okay, opportunities, you decide in your market how you feel in the world of commercial conversions and developments. Be mindful of those risks. Are the opportunities harder to find? Are vendor expectations gradually being inflated? Is it a massively competitive market? Development margins going down, risk profile up, less headroom? Well, some people would say all of those. Well, actually, it depends which pond you're fishing in. If you're fishing in an ever-decreasing stagnant pond, then I would strongly suggest every one of those is relevant. But if you've got the tenacity and the foresight to have laid out your fabric and network of contacts, playing the long game, are you looking for a deal before the end of August, or are you laying out your network there so that you can have a project a quarter, a project a month in a year, 18 months time? So you have to look at your longer game, and that might mean you need to supplement this with another strategy to create income. there are different areas here. So I would encourage you to not just go for the starry lights here, but you've got to be balanced with your particular strategy, and I can help you with that. So change will happen. I mentioned externalities out there. Externalities will change. Could be elections, could be, you know, the snap election a couple of months ago over Brexit, Trump. We've had the Chancellor springing surprises. Look, we shouldn't be surprised at change. I never am. You know, you just expect change, expect surprises, and then you're in a position of not shock, but you're on the balls of your feet. You're ready to react. The power of anticipation there. You've got yourself a spread of your, you know, diversity across your investment portfolio. Okay, so having that agility and tenacity, and you need to learn that quickly for people who have been through the hard yards, you know, the University of Life on this. And speaking of the University of Life, there is an incredibly powerful professional team out there. Okay, treat them with respect, invest in your professional team, work with them not just on one project, work with them on a long-term basis. And these are some of the professional team that are absolutely part of our team, the credibility team. The agents we've mentioned, commercial agents, obviously our solicitor. We might have a couple of solicitors to deal with various different elements of what we do. Our planning consultant, incredibly important. Almost without fail, we'll employ a planning consultant on every single opportunity, even if it's just a few £100,000 to do a high-level survey of the area, or, you know, desktop study. Unless you get the principles there right first time. So again, that's a cost of business, but we'd prefer to have that assurance at the front end before we start looking at large valuation fees and things later down the line. And also, of course, absorbing our time, that return on time invested. We don't want to waste our time on something that has got some hidden gremlins in the history of that, the usage of that building, which could have a negative impact on our intentions. The valuer, I'm going to come on to the valuer in a bit, a conundrum for many people, but I've got some pearls of wisdom that can really help you there. Your broker and your funder, we use a fantastic broker. In fact, we use two again for different strategies, but they are stakeholders. We like the banks. The banks are what make our car go faster. And if any of you have been to my networking event in Brooklands, you'll know Frank Williams' quote that I use a lot. Does it make my car go faster? Well, our broker and our funder, absolutely. They put a block on our accelerator pedal. They really do accelerate our business. Accountants, tax advisors, every time, our design team, a QS and commercial team, the contractor and estate agents. So a very powerful and robust team. So here's another quick case study for you. This is a D1 educational property, which we're in the process of going through planning. We expect that planning in September. That's converting it. We actually own this property. We do take measured risks from time to time. So it's D1 to C3, and that will be transformed into 6 apartments, three houses, between 3 and 4 bed houses out the rear. We've just unlocked another parcel of land which we can add to this as a phase 2 in the development. So really exciting, and there's an opportunity for some of you to come and visit this and spend the day with me. I'll come on to that shortly. In terms of the GDV, 2.6 million. Purchase price entry was 750k. We purchased this from a charity. I don't know whether any of you knew that for a charity and a local authority cannot claim capital allowances. They need to look at the history of ownership of the property, but you can, as long as that property has been owned for a long time by those two, by a local authority or a trust or a charity, chances are you need to get it checked out that capital allowances will not have been claimed before. So there's a useful top tip for you when you're looking at who's owning the property previously or who the vendor is. So again, there's a nice, 350 to 400,000 pound conservative profit there that will start to really extract some meaningful value for all the stakeholders. So again, you can see how the impact of the investment in our systems, of which we can help you with, can really make our car go faster, really accelerate our business. And that's why we've managed to secure 11 million GDV of projects in the last 7 days alone. But just a word of caution here, and that's the timing. Before you find your funding, your commercial funding, before that's put in place, you found that great opportunity, you put the offer in, okay? But at that stage, it's too early for your commercial funding. It's probably too early for many of your private investor equity coming in, because the initial due diligence is still being done. But you will need an amount of capital, and we call that seed capital. And that seed capital, depending on your planning strategy, could be anywhere from £2,000, could be up to £40,000 if you go into full planning, a number of consultants involved, and acoustic, attenuation reports, ground investigation surveys and things. Or it could just be a few £100 for your planning consultant, a few hundred for your solicitor, or maybe £1,000 for your solicitor. So just be aware that there does need to be some seed capital. Now, you may secure that seed capital for your planning, for potential deposits, professional fees. You may get that through your equity or capital investor, but that's a negotiation you're going to have with them, and it will firmly depend on their onboarding and engagement process and their appetite for risk as well. So just be aware of that. Commercial levels, it is possible to do no money down deals. Personally, I don't like that phrase. I think when you get into the detail, money is required. It may be yours, it may be somebody else's, but you need to anticipate that and prepare in advance. And that can come from own funds, retained profits, private investors. You could use it with SaaS if you could provide a route of security. And Nigel and I are trustees of our SaaS, really incredibly exciting, and loving that. And if any of you have been to our new SaaS Investor Network Facebook group page, please contribute to that. I'd love to hear from you. So you may need a loan agreement. Just a few points to note if you're bringing in funds on a loan agreement only. Use a solicitor. The lender may also require a solicitor. You could use 2 partners in the same practice and Chinese walls, which may aid things a little bit slicker. But credibility, trust, constant communication with your private investor will be one of your greatest return on investments in that phase, to make sure the onboarding process is clear. Under certain agreements with certain types of funder, you may have to declare private investment agreements, loan agreements. So just be aware of which legal entity those loan agreements come into, and help with your broker, and we'll give you an insight into how that might work. So the key terms within your loan agreement, certainly the amount, the exit, which will be the terms of that exit, the type of returns and the interest amount that you're going to be paying, and also the timing of that interest. I mentioned cash flow earlier on. Cash flow will be fundamental in any business, and your development is no exception. So make sure you have a suite of documents. We have our development analyzer, our development tracker, which tracks all of our cost and structuring and drawdowns, and then we have our cash flow manager as well. So those are our 3 suite of documents, and that will make sure that any interest that's not rolled up at the end, or if it's paid monthly or annually, quarterly as an example, are all brought into the cash flow forecast. And last but not least, security. If security is required, be it an RX1 or second charge, first charge, on this property, or indeed on any other property. The tenacity and quite often it boils down to the battle of the charges, whether you're working with your SaaS, your senior debt provider, mezzanine funder, private investor. That can be half the battle in understanding. So when you're talking with your private investors, understand their appetite to risk in advance. It will aid a lot smoother onboarding process for all concerned. So a couple of top tips on loan agreements. Please try and link the duration of the loan, if it's associated with a specific project, to the outcome of the event. Okay, if you're doing a flip or a development, it's going to last 12 months, and you're loaning in £50,000 for 12 months. If there's any delay, then you really do not want to be having to renegotiate that loan agreement midway through a project. So try and link it, and how I would approach that would be to try and secure the funds possibly on a range term, so between 12 and 18 months. Potentially put a long stop in there if you have to, but it's really important to give yourself that latitude, and the repayment will be triggered once the refinance or the sale of the last unit is complete. So that's the first tip I'd give you. That will really keep you out of trouble. And this sounds perverse, but make sure you have a penalty clause in your loan agreement. If you haven't got a penalty clause in your loan agreement and you can't pay the loan back at the end of the term, you potentially will be in breach of contract. And I would strongly suggest that is not a place you want to be in. So if you have a penalty clause, you can't pay the loan back at the end of the term, the penalty clause is then invoked, and potentially you'll then, instead of paying 10% interest, you might be paying 18% interest or whatever it is. So the penalty clause will stop you being in breach. So please check that. If you've got a good solicitor, they will advise these things. But I do see people tempted to produce something themselves. Okay, there are a lot of model forms going around, bespoke forms. So just make sure you've got a good solicitor who understands the background and will keep you safe in that area. So the valuation. Before I go on to that little gem, let's just have a look, see if we have any questions. So somebody's asked a question here, Olu, would you advise a newbie to go into commercial conversions or cut their teeth on other strategies? We have a number of friends and mentees, people we know, who have gone straight into commercial conversions. You have to be mindful, you have to be tenacious, but you do in any strategy. So it absolutely is possible. I would ask you to think carefully about the skills that you have, the existing network you have, what you want to achieve, and really understand those elements. But absolutely it is possible. And you don't have to be necessarily the developer. You can be part of the development process. You may be the party that brings the funding. You may be the party who has time. You may be able to negotiate some sweat equity. You may be able to find the development and get some sweat equity in the end project, or get an engagement fee. If you bring the property, maybe you can get mentored at a lower rate or complimentary. We do that with some of our team. So absolutely, yes, it's possible. James, no, there wasn't a restrictive covenant on the charity building. You do have to look out for those on all your searches. And Mark makes a good point. Penalty clauses must be a realistic estimate of the losses. Absolutely, but the important thing is having that clause there. Otherwise, you will become potentially be into default. Okay, so we'll move swiftly on. I'm conscious of time. So the valuation process, I'm just going to say here that be incredibly careful. Use your broker. The areas that we look at with our valuation process, we start right from the front end with our development analyzer. We go through every element. We always put in a low rate and a high rate on our valuation. We always look with local agents. The valuation from an RICS Red Book valuer will tend to be the lower of the two, so we immediately open up a range, and it gives us the ability to work very carefully and under promise, over deliver in our conversations, be that with the commercial funders, the broker, and indeed with private investors. So our broker, get yourself a good broker, worth their weight in gold, put your trust in them, hold them accountable, manage them, drive them, but work with them. They and the commercial agents are some of the two of the best friends you'll have if you get those great relationships. They're specialists. You want to be open with them, explain to them what your intentions are. They'll say, well, they maybe don't need to know about that part. Let's focus on this. And very typically, they will go and get funding on what they can see and evidence. So if you've got a 25 apartment permitted development, and you think you can get it, intensify it to 30 apartments, then thinking isn't good enough. You might be able to get a draft term sheet on a what-if basis, but it wouldn't go through, highly unlikely it would go through credit at that stage on a conditional basis. So they will guide you on what is possible, what isn't, what funders are flexible, what aren't, and give you best part of whole of market advice. Okay, so incredibly important. And they will guide you through that valuation process. Okay, you'll have a choice of which valuer on the bank's lending panel. Engage with them carefully, professionally. Sometimes you may choose to have a RICS Red Book valuation done yourself if you're then having to put in significant seed capital costs from some sources. Your private investor may want to see that. But the final valuation will always be instructed by the debt funder. And of course, you may not just have debt funder, you may bring in mezzanine as well, and your mezzanine might also insist on a separate valuation, although they may rely on the senior debts valuation. So this is Oak House. This is the one Nigel found back in October when he went for his haircut. This was, we secured this on pretty much Christmas Eve, on exchange and delayed completion. Permitted development was in place for 8 two-bed apartments, and we then went in that delayed completion period for permitted development to 16 one-bed apartments. A great joint investor, private investor team on board. That's now on site. Demolition phase is complete. Now putting up putting in the ground floor drainage and the stud work. So that is really moving at pace now. And in the early autumn, late September, early October, that'll start to be marketed off plan, and those units will be coming online Christmas just into the new year. So really, really exciting to see that one move. In terms of GDV, very broad numbers, 2.6 million GDV, 900,000 for purchase, contract price about 830 for the tendering to the local builder. And then the planning, whole cost funding, quite significant. So we're hoping for some significant improvement on that profit. Be a great project, and really making some inroads there, and really providing something that is a societal need in the local area. The local market needs one-bed apartments, so very significant interest there. Network, you will access a lot of things through network. You'll be that through your reputation, for funding, for deals, many things. But I would encourage you to be a networker of substance. Don't be a networker who talks. Be a networker who asks open questions and listens. Okay? That engagement is incredibly important. Be authentic, but also be known for something. Don't be known as a professional networker. What do you actually do? What do you create? People are genuinely interested. They're not trying to trip you up. So what do you do? Where do you add value? What is your story? People don't necessarily remember what you told them or the questions you asked. They will remember how you made them feel. So really listen carefully. And I would encourage you to allow that, your passion to come brimming over and resonate. Make sure it's done in the right way, and the right way is your way, nobody else's. Don't try and be somebody else. Okay? Evidence what you're doing and what you've done. Please don't evidence what you've got. Nobody's really impressed in what you've got. Okay? It's how you got there, what you achieved in the process, how you made others feel, what contribution you created in many different areas. And I would also encourage you, and many of you may have seen this in various various quarters. Don't become divisive. It's very easy, and we do see people who you know are just on the prowl for money. Every relationship they try and strike up, they're thinking, has he or she got a few quid? And actually, I think that's a very sad indictment of society. Okay, so don't start out with the intention, please, of making every relationship a potential funding source. I think you have to have the humility to understand people have different needs, different tractions, and it starts with your story. Do people engaged? Are they passionate about what you do? Do you understand why you do it? So where can you secure funding? Well, anywhere, to be honest. Anywhere where there's people. I had a couple of meetings today with vendors, past vendors and existing vendors, which we're currently negotiating. Highly prolific. Vendors can be private investors very quickly, and one of those was exactly that conversation. Networking events, angel funders. Just make sure you're not in a stagnant pond though with those two. Flying, golf. I hear many of these areas. If that's your thing, if you hate Formula One or you really don't like golf, well, probably don't go down to the golf club because you're not going to enjoy it. Do what makes you, get on the balls of your feet. You're passionate. Leap out of bed. Make it your thing. Okay. Yeah, but be known for something. Don't just try and be known for being a voice piece. And please, please, please take comfort and solace that not everybody's grass is green on the other side of the fence. When you tiptoe looking over into somebody else's back garden and it's all fine and they're fist pump, smashing it out the park, it's not like that. Okay, it's not like that in our business all the time. Yes, we have successes and we increasingly are sharing some of the challenges as well, because that's hugely important. And I'm sure, in fact, just raise your hand if that's something you're aware of, that actually, you can soon become intoxicated by everybody else's success and forget that actually it's marketing in many respects, and sometimes it actually doesn't exist. So I've just got a couple of questions here. So Reg, you've said a couple of deal examples show a margin of less than 20%. I believe a number of trainers recommend between 20 and 30%. Very strong thoughts on that. Set your own threshold. We put all of our costs in for our deals. Okay, so quite often you'll see 20, 25, 30% gross margins, before costs. Just make sure you've got all your funding costs, your title split costs, your sale costs, every element of your cost, and it's then our net cost. That's what we're interested in. Okay, so hopefully that was helpful, Reg. So it's easy to pick numbers off the top shelf, 20% this, 25, 30, whatever it is. It's got to be in context with what your strategy is and where. Okay. So I'm just going to move through some personal thoughts. Just do what you love. It'll radiate. Expand yourself continuously and enjoy people's company. It's really important. And then you'll be proud, you'll be humble, and you'll be genuine. You'll create that shared value. Now I'm going to move pretty quickly here. So reputation in the world of social media, you're dealing with some pretty serious commercial brokers, private investors, and banks. Okay, banks will do due diligence on your Facebook, on your social media profiles. So all the bad language, all the approaches, all that thing. Some people may not care about that. Some will. And I would suggest to you the bottom point there. And please do remember this. If you've got a pen in your hand, write it down. Your largest investor that you never had is the one that you never knew existed. Okay? People watch from a distance and they just simply won't engage if they don't like what you see. So in some quarters, you don't have to be very professional to stand out as professional. Okay? So play your own game, be who you are. Don't get drawn into some of the nonsense that that is on social media, and walk a mile in somebody else's shoes. So I am going to move on pretty quickly. You will have to raise commercial development finance, almost certainly. That could be senior debt or mezzanine. You must also top that up. You'll probably get somewhere between 65 and 75, 80% loan to cost on your development. So you're going to have to bring in private capital from own funds, might be family money, private investors, angel investors, some family offices to a certain extent. So there are a number of options there available to you, but you've got to lay the ground rules down. Don't wait till you get the deal and then think, well, how am I going to achieve this? The ground rules need to be laid down now. Now is the best time for you to start planting your tree of the future. So do that tomorrow morning. Your partner will bring a number of things. Evaluate what you bring and what they bring, be it the deal, the money, the experience, leadership. I've been a non-exec director on various company boards for the last 9 years. You know, an experienced non-executive director can add a phenomenal amount of anticipation and foresight into your business. So surround yourself with expertise and skill, and you'll emanate confidence. That's what you need. Many people need that. Okay, just one slide on business, but very important. I'd recommend the Institute of Directors Standard of the Board. Previous MD gave me that in the late 90s. It's well thumbed and worn now. The fiduciary responsibilities and probity of running a business, it places a lot of obligations on you as a director, and in some cases on shareholders and how you approach that, communicate it. Okay, if this is a company with a property asset in it, so just make sure your commercial conversions are structured correctly. If you don't get this part right, potentially you might miss out on capital allowances. Okay, so there are many reasons here, but remember the indelible footprint a company directorship will have will stay with you for a very, very long time. Cash flow. I've mentioned it a few times. Make sure you know what your cash flow is. I'm talking about proper month by month, week by week if you need to, cash flow on your developments. The bank will tell you, and please do remember this, the bank will tell you what they will loan against the numbers that you gave them. What they've said they'll loan, they'll quite often say, and therefore your private equity needs to be Y. Okay, that is not the amount of private equity you need. Please take note. Okay, that is their assessment based on the numbers you gave. You need to create a properly structured cash flow forecast which translates into the money in your account to satisfy the liabilities as a director of that business. Okay, so you'll probably find if you need $500,000 and the bank have identified, well then that, therefore your private equity is $500,000, you might need 560, 570, 580. And I would suggest it's not a good start for your private investor relations if you've agreed in principle, handshake, £500,000, and then you go back a few weeks later saying, actually, need another 70 or 80,000. So do be aware and make sure you've got a proper cash flow management tool. Quick one on project management, and there's Oak House in the background there. In order to get to legal completion, you'll need conveyancy, legal entity, commercial funding, private investor onboarding. All is incredibly important, and they're all individual project management exercises. So we use a transaction project management team, which you may find very helpful. So our development analyzer only takes us really to the point of offer being accepted. It doesn't get us through to exchange. We need to be cash flowing and using our development trackers, so the whole systems come into play once the offer's accepted. So don't be fooled by a deal analyzer that you can manage half the project on it. You can't. Costs, know your costs, control your costs, monitor your costs. These are bigger projects. Make sure you've got a commercial skill set on board of whatever description. They will be absolutely invaluable, and generally they'll be worth their weight in gold. They will save you the money that they charge. That's the way we always look at that team. So we're very proud of our team. We have, in conjunction with young entrepreneurs, we have Jess, Dan and William. They're part of our team. and they're doing absolutely fantastic. In some cases, they're running businesses, they're finding deals themselves, and they're still in their 20s. So somebody asked the question earlier on, is this right for a first-time strategy? It absolutely can be. You've just got to surround yourself with the right level of expertise. I mentioned my engineering background, and Patek Philippe, a great watch brand, but I love the marketing of it. You never actually own a Patek Philippe. You merely look after it for future generations. Okay, many of us look at a legacy, long-term legacy, but what will your legacy be? How will you structure it? Who will you hand it to? And will they be equipped to handle it? It's about custodianship and equipping your team to be able to handle in your absence, and then you can really leverage your time. And I'm giving back to through Young Entrepreneur. So we have a Commercial Developers Discovery Day. We've got a number of them coming up in Hull and in Essex. It'll be a full day with me personally on each and every one. I love sharing what we're doing, and I want to help you. So it'll be a full day. You'll be looking around our commercial development, and in the case of Essex, there'll be 2 developments that we take you around. So that morning visit there, be a full-on day. We'll have lunch, then we'll go to a meeting room, and we'll go through and just break down each one of those developments and give you just more top tips and really help you get confident on the stages that we go through. Okay, we just want to share, help you with our systems. Can't show you everything, but what we can do is give you that foresight and anticipation. So it's a full day with me. Nigel will be there as well. Phil may come in as well, and you actually look around our developments. Okay, so it's what it takes to do those developments, the systems we use, but the business mindset as well. The reality of how we found the sites, how we fund them, how we deliver those sites, the practicalities, the challenges, how we embrace them. And indeed, each one of these 12 fundamentals is applied to each one of our sites. So we'll take you through most of those and give you a real deep insight into what it takes. That economic equation, the risk, the return, and your risk-adjusted returns. So on Essex, the first one is next Thursday, week tomorrow, 17th of August. We've only got generally 3 places left on that one. That's been filling up rapidly. These are very small groups. There are not many people on each one, because I want to spend a lot of time with each of you and really get you to understand and come away with the confidence that you can actually achieve this. Okay, so in Essex, next Thursday, the 17th of August, and we've got another one on Thursday, the 21st of September, and that will be on a land development that's in planning, and also Oak House there that's in mid-flight construction. And also for those of you in Kingston upon Hull, we have an 18 apartment commercial conversion, which is just in the throes of its final exchange and completion. The contractor will be on site during September, so we'll have a look at that right at the onset of the development. Really exciting times. So Thursday the 7th of September, we've got 5 places, and then also got a few places in October. So I've been through the detail, 247, but I want to help you out. This isn't our reason for doing. We love commercial conversions and we love helping you. So for £49 plus the VAT, we'd love to see you there. But as a special bonus, and you'd have to be quick, for the first 3 of you that book, you'll receive a 30-minute call with myself. I'll spend that time between now and when you do your discovery date. If you go and book on our website, either any one of the 2 Hull dates or the Essex dates, and I'll spend half an hour with you on the phone. You can ask me any question you like. Could be on your strategy, areas that you need more clarity on, specific detail, problems, challenges, and that's my gift to you. But my time's valuable. I've got a lot going on in all my business interests, so just for the first 3. Okay, so £49 plus the VAT. And hopefully you found that incredibly useful. You've got some nuggets out of that which will help you in your day-to-day lives. So I'm just going to go through live Q&A. Please ask any questions. I'm just going to take a drink of water. Yeah, ask any questions Mark, from Sam, can you suggest a realistic target of number of projects to take on, e.g. monthly, quarterly, if say there are 2 of you working in the company? That's going to depend on your confidence, also on your track record and your ability to bring not just the deals but the commercial funding and also your private investment. You need a broker because you can't rely on a single funder. A funder will probably only loan on one development at a time initially. They would see on their loan book too much concentration risk, but it's going to come down to your time, and I would suggest you do one. Do one initially, get it up and running, get it over the start line, get it through construction, and then as you've got it up and running and you're into the monthly swing of all the drawdowns, all the monitoring surveyor work with the funder, then you can maybe start looking at continuing to nurture all the time those relationships with your commercial agents, keep an eye on the area, because remember, even if you don't do the next development, if you find one, you could partner with somebody else, okay, or you could potentially source it on, or there's many different areas. We don't do that. We've designed the ability to cater for that growth, but we're more than happy to take on additional private investors to swell those ranks. So I think you've just got to be in context. Don't try and compete with anybody else. What does great look like to you, Sam? Is that one commercial conversion secured, almost complete, legally complete by Christmas? Is that achievable for you? You've got 2 partners there, both learn together, and then at a point where you've got that up and running, your contractors on board, maybe then look at how you bring the second one on potentially. But just make sure you've got private investor and commercial development finance there ready in the wings. Okay, just looking, any other questions? We've got one here. Okay, question here from Nelly. Mark, have been trying to book on the discovery day this week and get an error. I've been in touch with your office. Okay, so I've noticed your name's actually has been secured on there. So yeah, I'm getting the thumbs up from one of my team who's with me. If you just Facebook message me afterwards, Nelly, we can double check that, and in fact anybody else if you have any queries, but I have just checked the link myself and it is working. So if you've got any problems, drop us a Facebook note and we'll be straight on it tonight or first thing in the morning. No problem at all. Question from somebody else here. Can you give us a brief on your mastermind group? I'm just conscious of time, but we do have a mastermind group. So I don't drip feed information. Please understand from me, I give you what I've got in the time I've got from 25 years of experience, 120 years from the 4 of us. So there's a discovery day where you'll really experience exactly what we're doing and ride shotgun with us for the day, and we'll talk you through exactly what happens. We have a 2-day masterclass, and that masterclass is all about commercial conversions and developments and running it as a business. And again, you find that on the website. And then we have a mastermind. So everything comes out in the masterclass, and then in the mastermind, where the masterminders have all of our systems. We put them on Dropbox, they have all of our systems, and we meet for a whole day each month. We meet 12 months of the year. We start at 8 in the morning, we finish at 5:30, 6 o'clock in the evening. We don't have site visits, there's no dilution. It's about you, what makes your car go faster, operating your business effectively, and it's highly, highly accountable. And we're getting some great results, fantastic results from our masterminders. I think I've got 2 places left on the mastermind group, which is the second Tuesday of each month. And we have a further mastermind group, a second one, which I'm about to set up, which just watch me on Facebook group. But if you are interested, drop me a separate line, but I appreciate there's many people on this call, so hopefully that was useful. But the best way is just drop me a line. Thank you, Kat. Pleased you enjoyed that. Any other questions here? Could you get a copy of the slides, Jason? Jason, we will look at that in the morning, and we'll almost certainly put those on our EquaLife website. So if you go onto that website, I'm sure many of you already been on there this evening, www.equalife.co.uk. We will put those on there tomorrow, and have those as our gift. And hopefully you'll be using much of that information to ask us many more questions on the Discovery Day. Mark says, a lot of people live in the never ever, funding their possessions through loans. I think that's a really important point. Yeah, there's a huge difference between good debt and bad debt, and we only use debt for appreciating assets, and an asset is something that cash flows, that throws off the income, okay, to pay the interest and appreciates in value. So yeah, please don't take on debt to fund just working capital and payroll and things like that. Every loan you take on, please do remember it's a bit of an obvious one, but if you take a loan on board, you have to pay that loan back. Okay, so build that contingency in your business and accrue that interest that needs to be paid back, and also understand how you're going to replace that sum back in your business. Is that going to be from a refinance of a project, a sale of a unit? Do not become a Ponzi scheme where you take on an investment and the way you'll replace that investment when it's due to be paid back is to find another private investor, and so it goes on. You are just heading for a row of dominoes and just waiting for the first one to be flicked, and it'll collapse like a pack of cards, pack of dominoes. So please, there's a very good point there, Mark. We see that happen from time to time, and it's a very, very painful landing for people. Peter, great stuff, Mark. Thank you, Mark. Thank you, Peter. Really appreciate your time. From Roe, thanks very much. Booked onto the Essex Day in September. Great. Looking forward to seeing you there. Look forward to meeting you, hopefully talking soon. Good. Excellent. Thank you. Thank you, David, Jason, Jim. Superb content as usual, Mark. Apologies for missing Brooklands tomorrow. Jim, you travel so far. You support us all the time at Brooklands. So have a great summer, and we'll see you very soon. Kat. So look, I haven't. I think that's pretty much. Any last conversations, comments, questions? Leslie, that was great. Thank you. My absolute pleasure, Leslie. Sam, brilliant webinar. Thank you, Mark. Again, my absolute pleasure, Sam. Very humbled by some of these comments, and genuinely, please remember that quote. Does it make your car go faster? You'll have many distractions. Please do not attract distractions. The power to say no is an incredibly powerful gift. Make sure you have that gift. Make sure you finally hone it. Make sure you use it. Okay. Does your car go faster? And for those of you who haven't heard it before, it's Frank Williams. His focus for Williams Motorsport was to make sure his car went supremely faster than any other car around the track. So whenever anybody brought him a purchase order, an invoice, anything to sign, he would ask them a simple question: does it make my car go faster? He was absolutely laser focused on achieving his goal. He knew the vision of his company. Do you know the vision of your company? And everything you do, not just in money you spend, but every little thing you open up on Facebook or reply to or get involved, or that just sucks the life out of your time, out of your precious working capital, out of your family time, which is probably the reason you're doing it anyway. We can all go in a downward spiral, and really, we can't spend time with the kids because actually we've got some Facebook messages to, sometimes we need a wake-up call, okay? And I can be a workaholic, and it's something I have to work on really hard as well, and I get reminded, and I'm humble enough to admit that. So please, let's all work hard together and share the challenges of being entrepreneurs, and those of us who actually are still going to the railway station platform every Monday morning to toe the line, and they know where the door is going to open in front of them. There is a route out of that, and commercial conversions could well be for you. Okay, you've just got to make sure you do it right first time, and you can. We've seen so many successes, and I really wish you all the very best. Now please Facebook message me, come down to PPM Brooklands and come and immerse yourself with like-minded people. Drop me a line, but it's all going to be there for you on the discovery day, and for 49 quid plus VAT. You know, it's the price of a train ticket into London, and you don't even have to go into London for many people. So Essex, you know, it'll be in Colchester in Essex and Kelvedon, actually. They're the two locations of our sites, and in Kingston upon Hull. So we will look at rolling more of these out, and you may wish to come again and keep an eye on the projects as they evolve, and you can see the varying stages. That's something that we could look at. But the first start is come, join us. It'll be me personally there giving you absolute value, the threadbare information of what it takes. You know, I'm not going to gild the lily, put a gloss over it, put any lipstick on it. It'll be exactly the challenges we faced, because I want you to avoid those in the future. Right, last dibs on comments. Salim, thanks Mark, pleasure Salim as always. Great content, James. Thank you, James. Thank you, Leslie. So I think we're pretty much there. It's 10 to 10. We've had the biblical rainstorms today, so hopefully all your gardens are intact and not underwater. It's been my pleasure to serve you this evening. I hope you've got an enormous amount of value out of it. My name's Mark Stokes. We work in EquaLife and EquaGroup. In your interests, please contact us. Really look forward to it, and hopefully see many of you on the Discovery Day. Take care. Have a great week. Thank you very much.